Our final check in valuation is to assess what analysts think of a stock. Analysts covering a company do extensive research on the underlying business and its prospects, and they then provide what's known as a price target. This price target is essentially just an indication of where they think the stock price could be trading at in the future based on this research. As we know with valuation, forecasts of the future can vary widely depending on who you ask, so naturally, different analysts can have different price targets for the same stock. That's why we've created the new Analyst Price Target check. Not only does it incorporate the range of analysts' current price targets and compares them to the current stock price, it also shows us how the previous price targets have compared to the actual share price performance over time. It can be difficult to tell if analyst targets are likely to be accurate, which is why we did some extensive data analysis and found that if analyst forecasts are closer together, then that consensus forecast is more likely to be reliable. The analyst price target check tells us whether there might be any upside opportunity with the stock, and more importantly, if we should have any confidence in that consensus price target. You can see in the chart how this is represented, and the table above provides a summary. The blue line on the chart represents the stock's historical share price over the past 2 years. The purple line represents the consensus price target, which is the average of all the analyst price targets looking forward 1 year. The purple dot represents what the consensus price target was from analysts at the time of the blue dot. As for the shaded triangle, that represents what the range of price targets from analysts were from highest to lowest, depending on the date your cursor is over. As you move your cursor over the chart, you'll see how this range of estimates changed over time, depending on what the range of price targets were from analysts. This can tell us how accurate analyst price targets were historically based on where the blue line actually ended up, and also how closely analysts agreed with each other. The shaded range will be green if the stock was at a greater than 20% discount to the consensus price target, and the shaded area will show up as red if it was trading at anything less than a 20% discount. In the table above the chart, you'll see the agreement section, and this represents how closely analysts agreed with each other. This agreement will read good if the lowest and highest estimates are within 15% of the consensus price target, which tells us that analysts largely agree on the stock's prospects. However, agreement will read low if the highest and lowest estimates are more than 15% away from the consensus, meaning analysts don't agree with each other. There are 2 criteria needed for a company to pass the analyst price target check. Firstly, the current share price must be at least 20% below the consensus price target. This is to indicate if there might be any decent upside opportunity with the stock. And secondly, the dispersion from the consensus must be less than 15%, meaning analyst expectations are largely the same. This second part essentially gives us a level of confidence about the expectations, because if the range of expectations were much wider, it would be more difficult to have any level of confidence in the consensus estimate. And based on the research we've done and what we mentioned earlier, the tighter the range of estimates, the more likely the forecasts are to be reliable. If the stock passes both of those checks, it will have 1 point added to the valuation snowflake score. However, if either of those criteria are not met, it will fail and no point will be added to the snowflake score. We can see more details of the underlying data represented in this chart by clicking the Data button, or we can learn more by reading on the Learn model below or on the article on our Help Center.